So the Lagos State Internal Revenue Service says it will exercise its legal authority to recover outstanding taxes from non-compliant taxpayers through third parties such as banks, employers, debtors, tenants, and business partners. In a recent public notice, LIRS said this action is in line with provisions of Section 60 of the Nigeria Tax Administration Act 2025, which actually grants the service the power of substitution. This collection includes personal income tax, capital gains tax, stamp duty, withholding tax. And while the move is aimed at improving compliance and increasing revenue, it has raised concerns about due process, privacy, and potential disruption for businesses and individuals. Itoro Adediran, a senior manager, tax, regulatory, and people services, KPMG Nigeria, joins me on this. Thank you so much, Itoro, for coming around.
Thank you for having me. Thank you for having me this morning.
Yes, you're welcome. So, Section 60 of the Nigeria Tax Administration Act is being relied upon by LIRS to justify recovering unpaid taxes through third parties rather than the courts. So, what exactly does the law say, and does it clearly authorize this approach?
Okay, so thank you very much for that question. And I think I should first of all start by explaining the entire process. The power of substitution is not the first line of action in terms of recovering the taxes. So when you're saying without going to court, there's still room for going to court. There's still room for objecting to notices. There's still room to engage the LIRS or relevant tax authorities, because it may even be the NRS. But you have opportunities to regulate, to engage them as much as possible before we get to the point where the power of substitution is invoked. The power of substitution is invoked when we get to the part where the tax liabilities have been concluded, they have remained unpaid, and then the tax authorities have done all that they can to recover this amount. That's when you can now go to the power of substitution. So again, it's not like you haven't paid taxes the first time and then it goes, your account is hit or something else. That's not how it's going to work, or that's not how it's supposed to work. There's due process, there are conversations, there are objections, there are administrative and legal processes before we get to the point where the power of substitution comes in.
But then under this interpretation by the Lagos State Revenue Service, they're saying that they can recover funds from the third parties without the consent of the taxpayers. So we need to have an understanding of that. Is it that when all the legal, regulatory or legal hurdles have been crossed, all the T's and all the I's, is it that they can now eventually go and tap into the resource of the so-called taxpayers without their consent to pick up the money because it's been identified or determined that they have actually infracted on whatever tax regulations that have been laid before them?
Yes. Again, that's why it's very important to draw that line, because before we get to that point, it's important to emphasize that we must have exhausted all possible forms of redress. When we have exhausted both administrative and legal forms of redress and the amounts remain unpaid, first of all, note that you have agreed that you owe this amount. The amounts are just being unpaid. Then at that point, yes, they can go and tap into the resources that you have, assets that you have in terms of funds or any other assets that can be used to defray the tax liabilities.
Okay,
but again, like I said,
okay, I understand.
Exhausted all possible options.
Okay, we'll come to that in a bit. I mean, we're going to juxtapose that with what the tax chief said, but then we'll come to that. Now, this power applies to taxes such as personal income tax, capital gains tax, stamp duties, and withholding tax. So, what concrete risks does this create for an average Lagos resident or business that falls into tax arrears?
Okay, and that's first thing, it's important to let you know why they have focused on this set of taxes. This set of taxes are taxes that are within the purview of the Lagos State Internal Revenue Service. So they have literally just stayed on their lane to focus on how they can collect their own taxes that are due to them. So what risks does it pose? Again, like I said, ensure that your taxes are paid on time after due process has been followed. You have opportunity to object to an initial demand notice. You have opportunities to attend reconciliation meetings. You have opportunities to provide explanation and documentation to support your part of the conversation. all of this will have to happen first. And if you're still not satisfied, then you can go to court. And even after that, when the notice for power of substitution is issued to you, you can still object to it in the first instance before we get to the point where this power is being used by the tax authority to recover funds. It's not a the first go-to when you're trying to recover funds. So the risk is minimal if you do all that you're supposed to do in terms of providing the LIRS the relevant information, engaging them as much as possible before you get to that point.
Well, the bottom line is that if it has been established that taxes are being defaulted, there must be some sort of payment, either from the defaulter or maybe the third party. So we are going to come to that, how it affects these parties. I'm talking about the banks, the employers, the debtors, and the likes. So Itoro, just stay with us for a while, all right? When we return, we'll continue from this particular angle where we stopped.
No problem. I'm here. Thank you.
So the Lagos Inland Revenue Service has said after all channels have been exhausted, based on the provision of the NTAA, that's the new Nigeria tax laws, that it can recover funds from tax defaulters directly from the third parties. So we are talking to Itoro Adediran, of course, who is Adediran rather, who is Senior Manager Tax Regulatory and People Services at KPMG Nigeria, and she's been helping us understand what these new rules are and how it applies to taxes being collected in Lagos State particularly. So Itoro, I come back to you now. The substitution mechanism that you mentioned earlier places legal obligations on banks, employers, debtors, tenants, and business partners to actually make sure that they remit taxes not being paid to the Lagos State's Revenue Service from the accounts of the tax defaulters. So does failure now to comply with a valid substitution notice not expose these third parties to personal liability for the amount stated? I mean, if the tax defaulters do not pay or refuse to pay, it means that it is these businesses or persons, third parties, so to speak, that would have to pay. Is that not what this implies?
Okay, first of all, these third parties are supposed to be custodians of trusts of funds or assets that can be used to defray the tax liabilities. So if they have refused to comply, the law provides that it would apply to them as though they were the ones who were supposed to owe or pay the taxes. That's what the law provides for. So basically, there's a possibility for it to appear as though they are responsible for the taxes where they are unable to pay. But again, before we get to that point, you know that these people, like for example, the banks would have your account details and they're supposed to regularly furnish tax authorities with the account details or balances that are available at that point. So they are ordinarily custodians or people that have access to either your funds or assets or anything that can be used to defray the tax liability. So after we have exhausted that, you can now look at the possibility of them being responsible or based on what the tax law says. Again, there will be further guidelines that will be provided based on the reform committee, and we'll see how that plays out in practice. But where they are unable to do that, the others should apply in terms of having them being as though they are the ones that have the tax liability.
Okay, so can this be framed as a provision for enforcing tax laws, or rather one that arbitrarily forces seizures of assets?
I will not say it arbitrarily forces seizures of assets, because I see where you're going and I see what you're trying to do there. But I will not say it's arbitrarily, because first things first, even if you have someone owing you funds and you have tried everything that you can to get the funds from the person, I'm sure you will look for legal means or other ways to be able to recover your funds. That's really what the government is trying to do here. I'm just saying, okay, I have exhausted all possible room for redress. I have spoken to you, you have even agreed that you owe me this particular amount, but you're not forthcoming with the payment. At that point, then they can now decide to invoke the power of substitution. But let's not keep forgetting that it is not arbitrary. You have had conversations. Even when the initial notice is put out, you can still object to the notice, stating the reasons why you're objecting to the notice of the power of substitution. So it's not just taking it the way it is, or just waking up in the morning and seeing that your account is being debited. No, before we get to that point, point, there are a lot of processes to be taken or considered. The tax is conclusive. You have agreed to it. It has remained unpaid despite follow-up, despite trying to reach you. At that point, you can now begin to know that or expect that this power of substitution may be invoked to recover the amounts.
Well, we don't know if there's any provision for these so-called funds to be paid in installments. I mean, if it's going to help these businesses stay operational while they meet up with their tax obligations. But then let's go back to the conversation that I mentioned earlier. The chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, that is Taiwo Udili, publicly denied a couple of, times back that government agencies can arbitrarily recover funds directly from individuals' bank accounts. So how should we reconcile this position by the tax chief with LIRS's current interpretation and actions?
I think the best way to look at it, and I'd be very honest, is to look at what the provisions of the law says. It has said that where you do not pay the taxes, this is what's going to happen. Now, if you look at it vis-a-vis what the LIRS, and I'm sure what I was trying to do was to explain that it's not arbitrary. It's not going to just happen like that. There has to be processes, which I've sort of outlined in our conversation earlier today. Before that happens, there are steps, there are processes. And funny enough, not everybody is even going to get to the point where the power has to be invoked. Before I have to do the power of substitution, I have to invoke the power of substitution, I must be looking at funds that are very significant. How many businesses actually would be under that purview? So let's look at it vis-a-vis what the intent of the law is supposed to achieve. It's supposed to ensure compliance and ensure that monies are available to government to meet the needs of the government, basically. So if you look at it vis-a-vis what the intent is, let's stay with that fact and see that what we're trying to do is basically how to recover this money. Remember, these are funds that are being owed. They have not been paid, and we have followed up. We have done all that we can to follow up, yet we have not gotten these funds. It's up until that time where we can invoke it. So I'm sure the intent is not for anybody to get to that point, because there are avenues, both administrative and legal, to enable us to recover funds, or remember the government to recover its funds, right? Until we exhaust those options before we can come here. This is a last resort, and that's one thing I want us to have at the back of our minds during the conversation.
Okay, so let's wrap up with this. I understand that the law requires recipients of substitution notices to disclose accounts, balances, and existing encumbrances when requested, which means they will be divulging information of their customers to these tax authorities. Now, are we not going to be having issues with data privacy, personal information being provided to the government, institutional overreach, so to speak? I mean, there's meant to be some sort of protection of your customers' data.
Yes, there is. And I will speak to section 142 and 143 of the same act that you have referenced, where the law provides that information received in the course of carrying out your work would remain confidential. So the laws have already considered the fact that this information needs to be kept confidential, and has made provision for it in the law for both people receiving the information and anyone who has access to the information by virtue of the work you're carrying out, to ensure that the documents and information remains confidential. So I will say that while that risk exists, the law has already even considered what can be done to ensure that that doesn't happen, and then stipulate penalties if that happens as well.
All right, so even as we hope that this would come with some sort of human face in terms of implementation from the LIRS, we also hope that these businesses will also be able to comply and pay up whatever it is that has been owed by them, so that we can have an ecosystem where everybody thrives and everybody's able to meet their, corporate obligations as regards tax, funds being remitted. Everybody just jolly well, I want to believe. Thank you so much, Itoro Adediran, Senior Manager at Tax, Regulatory and People Services, KPMG Nigeria, for shedding more light on this. It was nice talking to you.
Same here. Thank you very much for having me, and do pay your taxes. Thank you.
Definitely will.